Hello, welcome to Checkmate, and this is Mark Greenspan. Today's podcast is how payment and lockboxes work and why that matters for your business. If your company receives a lot of mail checks, or if you're curious about how large organizations process thousands of payments per day without drowning paperwork, this episode's for you. We're going to cover what a payment lockbox is, how it works step by step, why businesses use them, and how they're evolving in today's digital world. So let's dive in. So what is a payment lockbox? At its core, a payment lockbox is a service offered by banks or payment processors that collect and process incoming payments on behalf of the business. Instead of customers mailing checks to your office, they send payments to a dedicated PO box managed by your bank or processing partner. From there, the provider retrieves the mail, processes the payments, deposits the funds directly into your account, and sends you the remittance data electronically. In short, it's a way to outsource your mailing and payment processing securely and efficiently. Now, why do businesses use lockboxes? So before we walk through how they work, let's talk about why they exist in the first place. If you've ever managed accounts receivable manually, you know the process can be very time consuming because you need to collect the mail, you open the envelopes, you sort the checks from the remittance documents, you record the payment details, you prepare deposits, and you reconcile invoices. And that's before you even think about the reporting. For companies that receive hundreds or thousands of payments per week, this becomes a major operational burden. It also slows down cash flow, which is always a downside. Now, lockboxes are created to solve exactly that problem. So the customers send payments to a dedicated address. The process begins with your customer. When you send out invoices, instead of listing your office address for a payment, you provide a lockbox address, typically a PO box managed by your bank. Often, invoices include a remittance stub, and the stub contains important information such as customer account number, invoice number, payment amount, reference details. This structured data makes it easier to match your payments accurately. Step 2. The mail is retrieved and secured. The lockbox provider collects mail from the PO box multiple times per day. Many lockbox facilities are located near major postal hubs to reduce delivery delays. From there, the mail is transported to a secure processing center. These facilities aren't ordinary mailrooms. They operate under strict security protocols with surveillance systems, controlled access points, and detailed audit tracking. Security is critical because they're handling negotiable instruments such as checks. So step 3, envelopes are opened and sorted. Once the mail reaches the processing center, high-speed equipment opens the envelopes. The contents are separated into categories: checks, remittance documents, correspondence. Everything is tracked at the batch level, which creates a clear audit trail. That way, nothing goes missing and everything can be traced if needed. Step 4, payment data is captured. Now comes the most technical part of the process, the data capture. Modern lockbox operations use advanced technology to extract payment information quickly and accurately. They use MICR readers to capture the check routing and account numbers, OCR technology to read invoice numbers and remittance details, high-resolution scanners to create digital images of checks and documents. If the software can't read something clearly, trained operators step in manually, verify it, and enter the data. Now, many providers used dual key entry systems, where two operators independently key the same data to ensure accuracy. So the goal is simple: to make sure the payment amounts and invoice references are correct before deposit. So step 5, funds are deposited. Once checks are processed, they're deposited directly in your business bank account. Thanks to Check 21 regulations, physical checks don't need to be transported to a bank branch anymore. Instead, digital check images are used to complete the deposit. So depending on cutoff times, funds are available often the same day the mail is received. So this significantly reduces what's known as mail float, the time between when the customer sends payment and when the money becomes usable in your account. So faster deposits mean improved cash flow and better working capital management. Step 6, you receive the remittance data. At the same time the deposit is made, you receive detailed remittance data electronically. This can be delivered in several ways: secure FTP transfers, API integrations, ERP-compatible file formats, or online reporting portals. Many providers also give you access to check images and remittance scans through a secure dashboard. So your accounts receivable team can then quickly post payments inside your accounting system without ever touching a physical check. Now, there are different types of lockbox services. Not all lockboxes are the same. There's the retail lockbox, which is designated for high volume, low dollar consumer payouts, like utilities and insurance premiums. There's a wholesale lockbox, which is used for business to business payments, where a single check might pay multiple invoices and include complex documentation. Electronic lockbox, focused on reconciling ACH and wire payments by matching electronic funds with remittance data. Each serves a slightly different operational need. So what are the benefits of using a lockbox? What's the payoff? The first, speed. Funds get deposited faster, improving your day sales outstanding, your DSO. Secondly, reduce labor. Your internal team doesn't need to manually open or prepare deposits. Third, improved accuracy. Automated systems reduce keying errors and mismatched invoices. 4, enhanced security. Payments are handled in secure facilities with strong compliance controls. And 5th, better visibility. You get faster reporting, searchable payment history, real-time access to images and data. So, security and compliance. Reputable lockbox providers maintain strong compliance standards, including SOC audits, encrypted data transmission, segregation of duties, secure document storage. This is particularly important for industries like healthcare, finance, and utilities, where data sensitivity is high. So, the future of lockboxes. You might be wondering, in a world moving towards digital payments, are lockboxes still relevant? Well, the answer is yes. While electronic payments are growing, checks remain common in many industries. Many lockbox providers are adapting by integrating ACH reconciliation, wire matching, API-driven data delivery, and a hybrid receivable processing model. The future isn't paper versus digital, it's integrated receivables management. So, final thoughts. A payment lockbox isn't just a PO box. It's a streamlined receivables engine designed to accelerate cash flow, improve accuracy, enhance security, and reduce operational strain. For businesses handling significant payment volumes, it can transform accounts receivables from a manual bottleneck into a highly efficient system. If your team is spending too much time opening mail and posting checks, it might be time to rethink the process. So thanks for listening. If you found this helpful, be sure to subscribe. Until next time,